Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the complete futures, Forex, and crypto market scans. Today, we're going to be looking across the market. We got a couple of big stories, and one thing that's lurking on the periphery that we definitely have to be aware of because it could turn out to be a very big deal here in the United States. Also, we've got Russia oil sanctions, fresh sanctions that have driven crude oil through the roof. That's one of these teachable moments, I guess, but it's a situation where no matter how right you are in the market, if in fact the news blows up like it's blown up here during the U.S. overnight, it's going to spike prices, especially commodity futures prices. So I put some stuff out on X last night. I'm going to go ahead and walk you through those oil trades that initially were going very well, but when news like that hits the wires, you're toast. And that's what risk management's all about. Remember, there's lots of different types of risks. There's financial risk, there's emotional risk, there's social risk, there's all sorts of risks. In the markets, systemic risk is something that when we hold positions, we are very much exposed to. That's why a lot of folks like real short-term scalping, real short-term day trading, because they don't like the exposure to the world and really what the news cycle can bring. Last night was a textbook example of systemic risk facing the WTI crude oil market. We're going to unpack that as well. We've also got a litany of Forex pairs that I'm going to look at. Dollar yen, we're going to start there. Dollar yen, Aussie, Euro, Great Britain, pound. That thing made a comeback. You remember that trend line trade? Really, I thought it was dead, but it's back and it's actually in the green. And then the Kiwi US dollar, we're also going to wrap with that as well. So the Aussie pairs are on fire. They should be with the action in gold. We're starting to see gold catch bids. We saw the big sell-off, and now the bidding's on right from that 4,000 level. I'm fascinated to see how the metals markets develop as we roll into November. It really is going to be an interesting time to be in the markets. And we've got a few market drivers and outliers that we do need to look at and be aware of, because if we miss them, we miss them, and I don't want to miss them. I want to be on top of everything. So good to see everybody back in the room. Yes, sir. Good to see you. Yes, sir. Amir, always a pleasure, Amir. Let me see. Bobby Bob today managed to use the EMA 920 on the Euro, Great Britain pound. It was a nice move. Yeah, I mean, if you caught it, you caught it. That's great. We were playing a trend line on the Euro, Great Britain pound to the top side. I'm going to recap that trade in just a little bit. It's almost to its take profit. It looks like we may hit it here any minute. As far as what else we cover, that's kind of all up to you guys. I got a bunch of markets that I want to look at. If you bring some, then I bring some, then we're good. Let me see Ralph H. Good to see you, Ralph. Welcome. Okay, guys, let's go ahead and get out. I'll do a quick Forex market scan with some of our more active pairs. Dollar yen. If you remember this pair, we sort of had a nice Fibonacci retracement sequence set up on the monthly time frame, and we had a key zone right there at that 62%. Don't worry, I'm going to blow this up in just a second. But what you have is a situation where we've broken above 62%, sort of your yearly range. Pretty much that's the 2025's range. And what do you have? We've got a bullish market. So the dollar making a comeback against the yen. I don't know that I expected that. I really don't, but it is happening, and there's no point arguing with the market. If we take this down to a 4-hour chart, you sort of see the trade idea or the live analysis that we did the other day. We had sort of a 38% that was setting up right near this long-term 62%. So the big thing to remember about horizontal support and resistance is once they acted as resistance, but once they break, they become support zones. And essentially, it's just a line in the sand. If you're on this side of it, we're bearish. If you're on that side of it, we're bullish. And this really our read turned to a bullish read very, very quickly. So right there was your pullback, and now you're just rocking north. And it was really a fantastic trade right from that 62% level, which was right around 151, 60-ish, somewhere in that zone. What's up next? Well, I mean, for me, it's just all about the next port of call. The next port of call is going to be right up here at 78%, 154, I believe it's 154.69, something like that. You're going to have an opportunity potentially to short that level coming up. U.S. CPIs tomorrow. I already put the trade ID out for today, but definitely we're going to have this dollar yen is going to be on our radar for tomorrow's U.S. CPI, and I'll tell you more about that later. Okay, Australian dollar, U.S. dollar. A lot of people asking me about this one today. Daily chart, you can see we've just sort of been in absolute compression. Nice big move, compressed really right around that 65 zone. Key level. Thanks to everybody for joining me for the Key Levels webinar yesterday. It was very well received. I enjoy those key levels, are so hugely important to me. And when you look at where the trade is, 65 clearly was an absolute monster in this pair, right? So what's happening now? Well, I mean, you're looking to test the top side of this range, which essentially is sort of a rectangle formation. But if we do break above that zone, we're going to have a chance potentially to get a run. So for me, I'm more interested in really taking a look at resistance zones to the top side of this Aussie USD, because I don't believe necessarily that you're going to see a huge trend develop. We sort of have a downtrend. We have downward trajectory, and now we're flat. Do we believe the market's going to spring straight up? I do not. If in fact, I want to pay to see that. Let's back off to a weekly chart, and you can see right here we sort of have our weekly levels that are going to be relatively simple. We're going to go right off of that top, that spike high right up there. Then we're going to take it right down to last week's low, and you're going to have a nice set of Fibonacci retracements, and your sequence, your key level is going to be right there, right around 65.40, somewhere in that zone, 65.41. Could be a very good sell. Could be a good area to play a sell, maybe for 25 pips, back down towards that 65 money area. No question, the area of fair value in this market is 65. So if you are trading the Aussie, beware. If I had a TPO chart or a volume chart that actually showed you where the volume was, I'd almost guarantee that the point of control, or really the area where we've done the most business over probably the last 2 or 3 weeks, has been 65. No question about it. Something to think about there if you are trading the Aussie. Now, Great Britain Pound, Euro, Great Britain Pound. This was a trade that we put down some time ago. You see my little arrow. So we made this trade, about 8 days ago, something like that. The trend line itself, now, full disclosure, I drew this trend line to extend it, to show you exactly what's been happening with this trend line since we entered the market. So the initial idea was just a daily trend, sort of a downtrend, and we were looking for a bullish close above our trend line to get long. So right there was your bullish close. So theoretically, you could have bought up there. You would have just went for a ride. We waited for a pullback right around that trend line zone and got it there. That's a great way to trade trend lines, wait for a pullback to sort of your area. Remember, once you broke above it, it was no longer resistance. Up in here, this trend line's resistance, and then you broke. Once you broke and closed up there, this area is support. And if you sort of look at the action, it's been crazy, but our stop loss was very astute. It really was pretty good. We've sort of padded this swing low. To full disclosure, we probably should have moved the stop loss probably on this tight of a market. Probably should have been down beneath this level right here. Instead, we sort of put it right up beneath this big green candle, this one right here, something like that. Now you can see that we almost got stopped out the next day once we took it. We did. We almost got stopped. We did not get stopped. This thing's been live right there, as you can see on my trade. I'm sorry, I can't adjust the fonts on this MT5, so they are very small. But you can see that we've been long right there since, the 15th. So, I mean, that order has been rocking and rolling. It looks pretty good, up about $300. So we're going to go ahead and wait and see how that pans out. But what I'm saying is this. Your stop losses have to be astute. If your stop loss is 1 pip beneath that level, or if it's not based on maybe a key level where it's padded a little bit, you're going to get stopped out right there, and then the market's going to go in your direction, and you're going to be pulling your hair out. Probably the best stop loss location would have been this beneath this swing low, but I didn't want to take that much risk. So that's essentially where we ended up here. I feel pretty good about it. I think it's going to go up and get its points, but Bobby Bob said on the 920 today he got a great trade on the Euro Great Britain Pound, so that's pretty good as well. All right, some fresh analysis. I know there's a lot of you out there that are trading the Kiwi as well. As far as I'm concerned, this is just a real nice Elliott wave, sort of a, I wouldn't really, you could say that that's a 1. This is sort of real flat market price action up here. So that would be a 1. There's sort of a pullback 2. There's your 3. Now the question is the 3 going to continue, or are we starting to turn into a 4? I think that you're probably just on a real light 4 just because we've had about 8 days since we've done anything. The broader trend is still a little bit down for this pair. So what I would like to do is do something like we did on the Aussie. I want to step back. Now you'll notice right here that this last week, traded above the previous week, that inside week. For the sake of this, I'm going to go ahead and I'm going to ignore that because it's about a 1 tick higher. And in my view, it's still that this trend is what we're interested in. The nice big move there, the nice big that's sort of a hammer formation that's set up on the bottom of this thing. And I want to go ahead and do something like this. There it is, 38%. Going to be right up around 58. So we're going to have a lot of good things to be trading probably in the next 5 to 10 days. I really like what's shaping up here late in the year, though. We've got a lot of opportunities for some great trades, and that's really what it's all about. In my view, that's what it's all about. So that's a quick look around the Forex. Some of our more popular pairs. I'm going to throw probably one of the more traded pairs out there to start off with a trade idea. Then we're going to dive into oil. I also want to recap gold. I mean, it's just a tremendous day for gold right now, up about 0.85%. But my point is that it rebounded. Natural gas, we had a 920 crossover on natural gas. It's doing very well. As far as equities go, We haven't been talking much about the indices, the equities indices, and one of the reasons why is because they just seem to grind higher no matter what we do or what we say. You know, you could try, I mean, there's been folks that have tried to pick tops in the U.S. equities markets, and they've been absolutely destroyed over the past 24 months. So, probably want to be long risk assets until proven otherwise. That's for sure. Let's see. Tina, good to see you. Tina, welcome. T. Marina, good day, everybody. Good day, T. How are you doing? I'm doing well here. Ahmed, hello, Shane. A trade like that, if I had a target, if I target 38% Fibonacci, where would the stop loss be? Because a wide zone might be risky in the gold zone. Well, I mean, let's see. I'm just trying to understand the question, Ahmed. No worries. Blue Maggo, good to see you. Let's see. So a trade like that, if I target the 38 fib, there's nothing wrong with that. So would the stop loss be? Because wide might be risky in the gold zone. So let's say you bought a gold zone, which is sort of the 62%. Let's just use this Aussie Kiwi as an example before we get to the actual trade idea. So let's say you bought down here in the gold zone, right? And you're saying, okay, my profit target's going to be up here at 38%. So maybe you bought here and you're looking for that. You know, you could put your stop loss beneath 78%. A lot of traders do that with Fibonacci's. I don't necessarily, but it doesn't mean that it's wrong. It's a nice way to do it. You can just set it up as a fixed risk versus reward ratio, or you could wait for a little confirmation. You could wait for the price to trade this level, the 62%, and then sort of put your stop loss beneath maybe a spike low there to get the accumulation. You can do all those things. You can use market structure, fixed risk versus rewards, or the Fibonacci's themselves. So just a quick and dirty look. Let's say you wanted to buy 38. Where could you put your stop loss? You could put it beneath 50. Looking for a profit up here, you could do that. Let's say you wanted to buy 62. All right, you could put your stop loss beneath 78 and look for a return up to 38. So I mean, it's sort of it's one of those things where if you're asking me exactly where to put your stop loss, there's lots of different ways to do it. Me personally, I like to stick to sort of a 1-to-1 ratio. So when I put those trade ideas out, when we put the next level up in a pip expectancy for the trade, typically that's all I'm going to risk. So like today, I'm going to go over this trade idea in just a second, and I can pretty much show you exactly where our stop out point is going to be on this thing. And remember, the stop out point is really the most important part of your trade. I mean, of course, entering, getting in the market with a little bit of timing and understanding, you know, what exactly you need to do to get good trade location, meaning getting a good entry, that is very important. I think that probably more important than your entries are going to be your stop losses, because your stop loss has to do one thing. It has to get you out of the market when you're wrong. That means when your strategy didn't work or your trade idea went bust, the stop loss has to get you out of the market then. Now, the earlier we know that, the better. That means that our trades are a lot cheaper, but a lot of times you've got to give it some room and some time to work, or else you're going to just get chopped out all the time. Now, if we're high-frequency trading or we're scalping mechanically or we're doing algos or something like that, then that's different. Then you're going to have a stop loss, and when it gets hit, you're gone, and we're back for the next trade. I understand that. But let's say you're a swing trader, or let's say you're a true day trader, or maybe you like some of these trade ideas and you take the bids or the asks, or you basically follow me into whatever I'm doing. That's great. But when the stop loss is hit, the party's over. The party is over. I mean, the lights come on and everybody's got to go home. And that's very important that we understand that stop losses are not negotiable. Very important. So where you set your stop losses has to be a place where, number one, you have a reasonable chance for success on the trade. That's number one. Number two, it has to get you out of the market when you know you're wrong. As soon as we know the trade's not going to work, there's no point being in there. Something to think about when you're aligning your stop losses. I'm going to show you exactly where I'm thinking of putting mine here on this Aussie Kiwi trade that we're going to go over in just a second. Absolutely, Ahmad, you're welcome. Let me see. Mukesh, good to see you. Mukesh, welcome. Sir, namaste. 9 EMA strategy. 9 EMA strategy. Well, I mean, I haven't covered the 9 EMA in a long time. You know what? Tomorrow on CPI Live, we'll pull up the 9 EMA with a little RSI confirmation and maybe do some high-impact scalping right after CPI. That might be a lot of fun. We'll look at probably futures. We'll look at index futures and maybe some Forex pairs. But Mukesh, we'll give it a shot. That's for sure. If you're here because of the 9 EMA video, that's the one everybody's pretty much seen. Well, thanks for coming by. If you have any questions at all, we can certainly do that. But a 9 EMA, yeah, I'll work a 9 EMA trade or two, maybe a little bit later. Remember, if you want to trade anything on the planet, switch markets, head on over to switchmarkets.com. They'll get you up and running. There's huge bonuses. Bonuses vary per municipality, so be sure to check with live support there first. You get free MT4, MT5 demos, funded accounts, get free access to Algo Builder. You also get a free VPS. I'm working on some educational materials on how to get your VPS hooked up right now. So VPS, Algo Builder. We got a reverse KYC program where you can start trading immediately before you pass the funded or the know your customer protocols that brokers have to abide by. So there's a lot there. So feel free to head on over and give it a go. Okay, U.S. oil. U.S. oil closes in on yearly lows. This was a trade idea that I had. I wanted to buy 55.15s. We didn't quite get there. We got the 56s, and now U.S. oil's trading 61.81. So we're going to go ahead, and I'm going to circle back around to this one because we have a lot to say on oil today. As far as this one right here, this was the gold market. This gold trade idea we just missed. And it was sort of a week, a near misses for major trades, at least in the commodities markets. Now, this one right here, we had traders inside of the room that said, Shane, I got my order down at 4,005. That was a really astute entry. That was a very good entry. And I I'm not going to say that I knew it. I knew that price was going to stop at 4,000, but we talked about it in the live stream. We thought that, yeah, potentially there was going to be a big bounce off of 4,000, and there was. In my view, it may have been a little bit, it would have been worth it to see a washout of 4,000 and then looking to go long from our Fibonacci's. That's what our trade idea suggested. But if you were aggressive right on the other side of 4,000, you were 100% right. We're back up to 41.35. I don't think we're coming off. I think that was it. That was the dip, but we'll go ahead and wait and see exactly what develops. So we didn't quite get our entry there in gold, but it's still on the board, and maybe we'll take a look at it next week or the week after, but I don't believe so. I think that was your pullback, and those that got in on that made a lot of money. Okay, now this is definitely what we're looking at today for our trade idea that I put out earlier this morning. Oil spikes on fresh sanctions, Aussie, Kiwi support in view. I gave you a write-up on what happened in the oil markets, and then also we focused on this Forex pair, because right now oil sort of in no man's land. I'm going to pull it up, and we're going to do some technicals, but I want to see exactly what happens here. We're up 4% on the day, almost $62. You want to sell pretty much every big round number, but we got to wait. So we're going to go over oil in a second. But Aussie, Kiwi, we're looking at a bid here right from the 38% Fibonacci. So you got a 38% Fibonacci level right around 112.50, somewhere in that zone. Well, right in that zone, you've got an opportunity potentially to go long and make a few bucks. Now, to answer your question, Ahmed, if I'm going to go long right here, where would my stop loss be? If you're going to use Fibonacci's, you can put it right down in there somewhere. Don't put it exactly on 50%. You can put it a little bit lower than that. I don't particularly like that because I like key numbers, big round numbers, things like that. So if you go back to the trade idea, we're looking at something like 62 pips, something like that, and we're looking to buy in at 112.57. Okay, so that's great. So our bid, theoretically, well, it's not theory. I mean, if it comes into play, so our bid's going to be right up in here. Okay, that's going to be our bid. So if I'm looking for 62 pips to the top side, we're going to be looking for 113.19, something like that. I believe was the next level. I'm somewhere in that zone. In case that's close enough. So if that's going to be my trade, I'm going to risk that as well. I'm looking for a 1-to-1 payoff here. So if I'm looking for 112.57-ish, and then we go down 62, 111, what are we looking like? 111.87, somewhere down there. That's my stop loss. So if we go ahead and pull up our long position sort of reader here, and we want to go ahead and see, okay, that's it. And that's it. So what do you have? Very close there, very close to a 1-to-1. Well, it is a 1-to-1, but you can see that's exactly what we're looking to do. So where would my stop loss fall? It's going to be right beneath 50%. That's an accident. I didn't plan it that way. That's an accident. I wanted my stop loss beneath 112. So for me, if this trade doesn't really get hit and doesn't go up and get its money, it's going to come down probably and mess around right around 112, maybe 111.92. I want to let the trade breathe a little bit here, potentially because we could get a rebound. What I don't want to do is I don't want to cut it off immediately when it hits 111.92. I want to let it bleed just a little bit. And you're going to, as you take these trades and you manage enough of them, you start to learn tendencies. And a lot of times what will happen is you'll see a big spike of volume come down and knock you out and the thing rebound. That means absolutely nothing with regards to our stop out points. So in this instance, my stop out, I've got a 13-week EMA down there at 111.91. We've got 111.92, and we've also got the big round number of 112. That's all going to be key. I want my back just beneath that. So I'm going to give all those technicals a chance to work in my favor to potentially save my trade before I get stopped out. So that's how I'm setting my stop losses. Now, is there a lot of thought that goes into it? Yeah, there is. I'm always looking at key levels. I'm always looking at my Fibonacci's. I'm always looking at the trend. If I have a moving average that I can use, that's great as well. But all that stuff factors into where exactly I want my stop loss. I want you to think of stop losses in dynamic terms. I really do. Always remember that your stop loss has to be where you're wrong. Now, I know if price breaks beneath my moving average and beneath this 50%, I'm wrong. This thing's going lower, a lot lower. So I want to give this an opportunity to win. That gives me a pretty good opportunity to win. I think our payoff is very reasonable. We're just looking for a little bit of rotation back up in to the weekly range, which is really nothing in the scheme of things. I see that as being a legitimate trade. Now, will it work? I don't know. If the Australian Prime Minister or the New Zealand Prime Minister announce some crazy policy or maybe a trade war issue hits that region, then we don't know. Then we might lose. And if we lose, we lose. That's the way it is. That's systemic risk. It's very important. You couldn't account for what happened in U.S. oil last night, but it happened. So that's all we can do. Remember, a good trade has three parts. You got a good entry, you got a great stop loss, and a reasonable profit target. In my opinion, that's a viable trade. If I don't have those three things, then I can't get into the market, or I shouldn't get into the market. Something to think about there if you're interested in learning to set your stop losses. Okay, let me see. We got another question here. T. Marina, Shane, what do you think of the 5-3-1 trading rule, and is it beneficial strategy to use? The 5-3-1, it rings a bell. I think we made a video on it a while back. The 5-3-1, it does not ring a bell right now. I'm sorry. Let's see. 5-3-1 trading. What is it? I'm not necessarily certain. T. Give me a quick refresher on it. It's right on the tip of my tongue. I can sort of think of what it is. It's got to be like a trade management strategy, I believe, or a money management. I don't know. Remember, there's a couple rules on this stream. If I don't know, I'm going to tell you I don't know. I don't know about the 5-3-1, or I'm not an expert in it. Let me see. Ahmed, what's your favorite two pairs for an intermediate only to be traded? My favorite two pairs, currency pairs. Man, I lean on the majors. I mean, it's tough to not trade the dollar yen. I really like the dollar yen just because it moves. And then also the Great Britain pound USD I like because it moves and there's more money involved. It takes a little bit more margin to trade it, but that means you get paid when it moves. I'm not really a big fan of the Euro USD. It's very rotational, but it can be good. So I would say if I had to pick my two favorite pairs, and I don't really, think about it. Also, the Aussie CAD's good too. That's a good one. But I would say somewhere around the Aussie CAD, US dollar or Great Britain pound USD, and then the dollar yen. That's what I would say. Let me see. T. Marina, choosing 5 currency pairs that you like to trade, developing 3 strategies with multiple combos of trading styles, tech indicators during the most suitable time for trading. Developing 3 strategies. That's interesting. So 5 pairs that you target. I can tell you that there's ways to mess that up. I mean, let's say you were doing a 5-3-1 and you have 5 pairs to target and they're all majors and you're using 3 strategies on each one of those majors. You're all going to go as the U.S. dollar goes. So, let's say you were going to pick 5 currency pairs that were showing no correlations. That'd be fantastic. That would be something that gives you clearly the goal of it's to get diversification. So you want 3 trading strategies that you can trade on each one of your currency pairs. Okay, so that's diversification via strategy. And then if you get the currency pairs, 5 currency pairs that are not correlated, then you've got diversification of assets. So I can see what it's designed to do. Do I think it's possible? Yeah, it's possible. If you have the money and the platforms and can lay off all those trades, then yeah, I mean, anything that can spread out your risk is typically a good idea, especially if your strategies are viable. If you got viable strategies that have a pretty good expectancy, then that's the way to do it. Spread out your money. Remember, a strategy, you'll know when your strategy works if it works on a number of different markets, on not necessarily time frames, but if it works on a number of different markets. So if you have a strategy to trade the Euro USD and it functions pretty well on, say, the Euro CAD or something, then you have something with some concrete tenets that isn't really just dependent on getting a big move here and getting a big move there. It's built for consistent gains. Definitely something to think about there. Let me see, Mukesh, I'm living in India. Well, good. Thanks for dropping by. I'm out here in Montana in the United States. I know I talk a little fast and I can be very hard to understand, but you can always go back and rewatch the streams and even have them translated to where they can really help you give some insights into the market. So something definitely to think about there if you're a viewer. As far as what we have on tap for week 43, today was supposed to be weekly jobless claims. We did not get them. Tomorrow's going to be the consumer price index, and that's big. We did have a few news items, though, out today. Existing home sales hit the news wires, came in about 1.5%. That was a little bit better than expected. As far as what real estate's been looking like, it's actually been fairly resilient given the changes in monetary policy and a potential government shutdown and economic contraction and all that. Housing's been pretty resilient. As far as the consumer confidence index out of the EU was down big, negative 14.2, a little bit better than expected, but still not very great. So are we going into a recession in some of these regions? UK, EU, US. We're not really sure just yet. We don't think so, though. We think that the central bankers have cut interest rates fast enough to stay out in front. We're going to go ahead and find that out as well. Let's see. Vice President for Barr speaks. I wouldn't worry about that just yet. Natural gas storage. Natural gas storage came in at 87 billion cubic feet underground storage here in the United States. That's a little bit better than expected and better than the previous release. So that sort of is a bearish market driver for natural gas this time of year. And we're sort of bullish natural gas. We had this crossover develop on the daily chart, this 920 EMA. When the 9 EMA crosses over the 20, you're looking to go long. Well, there's your big golden candle we have that's in our coded video. Check that one out over at How to Trade Calm on YouTube. Something like this, though, still heading higher. So 33.94. This has been a pretty good trade. This hasn't been a bad trade at all. We're in about day 3. I would have expected to get more of a pop off of that natural gas on the sanctions news than we did, but we didn't. So still sort of shooting for 4 up here somewhere. I think that we have a very good chance of getting that. I don't know that we're going to see a reversal in this market, but there was a bullish crossover, and there was the rally. So something to think about there if you're a gas trader. Probably still want to be long here. As far as what else did we have? KC Fed Composite, that means nothing. It really, I hate to say it, but it really means nothing. The T-bill auctions, we cover those on Mondays typically. You can see that the yields continue to come down in these debt instruments. 4 week is just a 1 month, very short time frame debt instrument. 8 weeks going to be 2 months, very short time frame. A lot of your bankers that are making car loans and things, not necessarily for like a 10-year car loan or an 8-year car loan, but some of those folks that are maybe on those used car lots that are trying to flip as much financing as they can and then turn around and sell those loans off to bigger financiers. Those are the folks that are watching the 4s and the 8s very closely because they want to know what their APRs and their interest rates have to be for next month. So think short-term debt, more of an action, more people in the business of turning money over rapidly as opposed to the longer-term stuff like those longer-term, those like 10-year T-bills, things like that. But your yields are coming down. That means rate cuts are coming. It was a long way of me saying everybody's expecting to have more money soon to work with. Whether it happens or not, I don't know. I just don't know. Okay, consumer price index tomorrow, bright and early for me, 6:20 a.m. In the mountain time zone here in Dillon, Montana. It's already winter time. It's starting to snow a little bit. We're supposed to get our first big one this weekend, so I'm going to be up, probably be wearing a big jacket or something if it does snow. But we're going to be up early here, 8:20 a.m. Eastern, 10 minutes before the CPI number drops. I'm excited. This is really the first set of U.S. government numbers that we've had since the U.S. government shutdown. So we've got the shutdown that's really knocked all the economic metrics off the table, and now we're back to basics. We're going to get a CPI report. We're going to get to trade it. It's going to be fantastic. I'm really looking forward to potentially getting in on some good trades. And we've got some things that are developing that I think that are going to really set us up for some fantastic trades. So I'm interested. I think that the CPI is probably going to make a tremendous amount of news tomorrow, and we're going to be ready for it. I think metals are going to be one of those markets that are the most impacted. So what do we have right here? Core CPI is going to be one that everybody's watching. Core CPI is the CPI, the Consumer Price Index, inflation numbers, without your more volatile categories like food and gasoline. Core is going to be the most important tomorrow. The reason why is we've seen those gas prices come down. We've seen oil prices until today come down relatively significantly. And you're going to be right there thinking CPI probably at least going to hold serve, maybe come down a little bit. I don't think CPI moves the markets. I think core CPI does. Now, as far as what to expect, this is a good look at our 10-year chart for CPI. And this pretty much is the metric that's been driving the markets with regards to monetary policy. The Fed watches PCE price index. Consumers and traders watch CPI. The markets watch CPI. So this is going to be a tremendous amount of volatility on this release. But you can see going back to 2020 and the COVID era, you'll see right there we kicked off into a period of inflation that really is unparalleled in American history. So in pretty much world history as well. So right here, sort of flat. As long as inflation goes up sort of at, a little bit slower trajectory, then you can always, they call it real inflation when you're making more money than you're spending. Consumer prices rise, but you're still making enough to compensate. Then you're in business. That means inflation isn't really a factor, but it's when it kicks off in a big, big way. And we've seen historical examples of this, the most famous of which, the Weimar Republic back in Germany after the turn of the century there in the early 1900s, when the inflation got so overbearing that it was an absolute financial collapse, catastrophe. That's sort of the gold standard for inflation, but we've seen it in a lot of other places in the world. Once inflation kicks off, it's really tough to stop it. And what we have here is really a period of inflation that has been unbelievable, really difficult to deal with. Now, since that real steep slope that sort of ended, I would say right there in mid-2022, you can argue that our prices aren't going up as dramatically, but they're already high. Inflation is entrenched. Prices aren't coming down anytime soon, and there's nothing the Fed can do about it. And if they're going to cut interest rates, and we're going to talk about government spending and all the different things that are supposed to be happening here under the Trump administration, you're going to see inflation probably creep higher and higher and higher. Now, the question is can they slow down the rate of change in the value of your money? That remains to be seen. Tomorrow we're gonna learn a little bit about the current state of inflation and where it's at and what exactly potentially the Fed needs to do to at least try to slow down the increase in prices. They absolutely have to do that. Let me see, Blue Mango, will CPI go ahead tomorrow? Yep, we're on. It's scheduled and we're ready to roll. So I'm going to be on live tomorrow, 10 minutes ahead of the release. So about 6:20 a.m. my time, 8:20 a.m. Eastern. You're going to have to check your local listings for GMT. If you want to know exactly when that is, log into the How to Trade Trading Room. We've got our upcoming streams. It'll give it to you in your own local time, that's for sure. Isaac, hello. How is the U.S. 100 looking? Yeah, we'll look at the U.S. 100 in just a second. And my thoughts on Ether, absolutely, Ahmed. We'll dive into the Ether. First, though, we've got to get to it because I don't run from losing trade ideas. I put one out last night on X, and I thought it was pretty good. It turned out just to be an absolute dog. And it had to do with the U.S. oil market. Now, some breaking news can really sway anything. This is one of the biggest news items we've seen impacting the commodities markets in quite some time. So something like this, Russian sanctions on Russian oil, U.S. sanctions on Russian oil companies failed after Putin talks. So basically what's happening here is the new sanctions have come across the board. Trump's upset that they can't really get anything going in Russia-Ukraine peace. So basically the idea was to sanction individual companies, and the two companies that were targeted were, let me see if I can find them here. I honestly don't remember. I looked at about 50 things today. Okay, Rosneft and Lukoil, those two companies are the ones that are some of the biggest Russian exporters, and they're major players in the global oil trade. Well, they also, provide trade partners of Russia, think India, think China, with a tremendous amount of oil. So by doing this, essentially you're cutting off oil supplies to India and China, and if they continue to do business, then you're going to see sanctions. Actually, they were threatened to be removed from the Western banking system, which goes back to the SWIFT system of payments. So interbank transfers become very, very difficult to do. So it really is a big-time threat, and it's driven the price of crude oil through the roof. So if you want to get out to the crude oil charts, there you go. Nice big move today. This week we're up about 8%. You can see we had sort of a weekly sell develop back in August, and you're looking pretty darn good. I was looking at April's lows somewhere right around 55.15. This week we got down to 55.96 before bouncing back up a couple of dollars we're up $5. So 56, somewhere right in that zone, 56, and now we're up 590. So this type of trade right here is indicative of what can happen when news hits the wires that isn't expected. It shakes markets to their core. So what we can do is, if you're still short on this 920, and I don't think any of us are, but if you were, you had a great trade. I mean, you got short right in there at 63, and then you went down to about 50, 56. Very good trade, and now you're giving back all your gains. So I don't know what to tell you there if you're still holding shorts. I think that it was a very difficult thing to do, to predict that type of market environment off of a news event. Now, we're still looking at 2025's lows. I don't believe the lows for the year are in yet. I think we go lower, but for right now, everybody's on the ropes. So as far as a daily chart's concerned, this will give us a pretty good inkling of how to trade this thing moving forward. You've got sort of your spike high and your spike low. Today's lower extreme down there at 56, and now you're bouncing up, and what do you have? 62%. You've got excuse me, this is a weekly chart. You've got your weekly EMA right there, weekly 13-period EMA at 66.61, and then you've also got 62% at 62.44. Circle that level. That is a monster level. That's a potential short all day long. What was the high today? 62.20. So if we do creep up a little bit higher, I think that that's a great area to be looking to take the short and maybe look to hold that thing. I would be very surprised unless we get another big news announcement if crude oil can hold its water around above 60. I don't see a weekly close above 60 this week. I think you're going to sell off back down to 59 or 58, but I don't know that for sure. And I can't just tell you to go short and hold it because we just don't know. This market could tick higher. But to me, one of the great things about being a retail intraday trader or maybe a swing trader is you have a chance to get out of your positions and then go back into the market. For me, I mean, once this 60 area was gone, you had a pretty good idea that we were going much, much higher. Let's take this down to maybe a 30-minute chart and see exactly what's happened. So right here, going back to yesterday's session, this is sort of after the open. What did we go to? We went right to that 38% at $60. Really some great scalping. Nice little pullback down there to about 59.71. Went a little higher and then eventually came down to about 59.72. So there was some pretty darn good scalps for about 20 pips a pop right there before we broke. But once we broke, it was gone. So now we're looking to do basically the same type of thing up here at 62% on the weekly. And I think that you've got a much stronger trades right around that 62.50 area, 62.40 to 62.50 something, maybe 62.25 to 62.50. That's fantastic topside resistance. That's for sure. So I wanted to get that in as well. A couple of other things that we got to recap here. Government shutdown. It's rolling on. Rolling, continues, and they're not going to be able to get anything done on any votes anytime soon. This is the big event, though, that's starting to percolate and will apply incredible political pressure to those in Washington. SNAP benefits, if shortage continues, essentially these are the food assistance. So a lot of folks that are getting assistance from the government to pay for their food. You've got a lot of these benefits for like 42 million Americans are going to expire. And you can see right here, I live in Montana. That's really hurt benefits for 77,000 people, which is about 10% of the populace. This is a big deal. They're calling it an inflection point and everything. The magic number there is November 1st. November 1st. So if you're interested in the government shutdown and what it could mean, these EBT cards and these SNAP benefits, that's probably the biggest single political thing that you could possibly be looking at right now. All right, US 100 and then Ether, and then we'll go ahead and call it a day. Let's go ahead put the US 100 on the Fibonacci's and see what it spits out. For me, 25,000, no question. That was the fight. Nice 30. Look at this. I mean, this is a 30-minute chart today. Boom, went right back up to 25,000 based and then went. We are clearly bullish. So what do we want to do? Well, I mean, there's a lot of things we can do. We could probably wait for a late-day retracement and try to scalp it intraday. I don't know if that's the best idea. What I would be looking to do is something more along the lines of, bidding. You want to bid 25,000 if you can, but you can see the key levels. We are going high. We're blowing high. So let's get rid of my 25,000 there. What do we have here? Weekly chart, all-time high. Remember our key levels seminar from yesterday. All-time highs are definitely a key level. High right there, 25.2. You got to have that written down somewhere. 25.2 is your high, at least with this US 100. Your pricing may be a little bit different depending on how your broker is assigning the prices. But so what's the high this week? Is 25.205 right there is 25.2. So you've got really a double top that's sort of setting up right there, right around 25.2. Do you want to buy it or sell it right now? I don't want to do either. What I would be waiting for is a break and a close above that 25.2, maybe a big break, and then we buy pullbacks. To me, that's what I would do. This right here is just a compressed market. I mean, look at it. It's just compression. That's really hard to trade because, pretty much at this swing high, these daily swing highs, there's been sellers up there protecting that area. Maybe 25,250 is probably the key level they're protecting. For me, I would be looking at the next. I mean, we're seeing the compression around 25. There's no question about it. Just to throw a quick line up here on a key level. I mean, that's it. That's 25. We've been doing business here for a while. It looks like we're going to press north of that number. I would say the next key level up is going to be 27.5, where you see something like that. Now, how high do we go? I genuinely don't know. I know that rate cuts are going to be good for the Nasdaq. I know that the earnings reports are probably, this is earnings season. Saw a bit of a pullback yesterday, and now you're getting back everything. I think CPI is going to send this thing crazy, but it looks to me like you want to be on the long side of it. As far as the 30-minute chart goes for the U.S. session today, it's difficult because right there's your opening bell, ding, ding. The volume comes in the market. Now you rally, and what can you really do from here? If you want to go late day, if you want to make a late day trade, something like this is probably going to be pretty good. A lot of people are going to be looking at it. So you've got 25,000. U.S. session, if you can get a high defined, like a clear definition of a high there, you could go right from that open, that New York open, right to that high. You'll notice that that's sort of going to be the area that everybody's looking at right there, right around 25,000. So if you wanted to bid that, probably could. You just got to keep your profit targets need to be very, very conservative here because this is sort of a high-risk environment. This is intraday trading, 1% to 3%, and I wouldn't go much over 2% on a trade like this because it's intraday. We do have a key level of 25,000, but it's been traded over and over and over again. I don't know that I would get fooled into that. So if you're going to do it, be careful. Personally, I'm not even remotely interested in that. I'm waiting for CPI. I think we're going to see some good stuff. So I'm confident. I hope that helps you, Isaac. I think it may. Ahmed, your thoughts about Ether? Yeah, let's go ahead and take a look at Ether. We did promise a little bit of crypto analysis. So here's Ether, 30-minute chart, interesting stuff. Let's go ahead and back this thing off to a monthly and see exactly where we're at for the month. Okay, get rid of everything here. What happened this month? Well, I mean, you had a hell of a range. Sort of missed to the top side, nice big sell-off, and now you're bouncing back to the center of the established monthly range. What does all that mean? It means that we're not really going much of anywhere. We're still bullish, I think. I think that's a fair thing to say, but it hasn't been as easy of a ride as it has been for Bitcoin. You'll notice there's been significant pullbacks here in Ether over the past 18 months. So this pullback right here to about 3,600, 3,500, what was our low for this month? 34, 36. So pretty good area to buy, really. 38% is a fantastic area to buy. But right this minute, are you sort of, are you hawkish or dovish? To me, I'm definitely hawkish. I'm bullish, bullish or bearish. I'm bullish. I'm bullish crypto. I think that these things have a tremendous top side on them, especially given the environment we're in. The rare earth mineral trade is definitely bringing some angst to the market. Tariffs are bringing some angst, but big picture, the minerals will get ironed out one way or another. And as long as you have chips, you can have crypto. So I think that you've got a pretty good rebound going here. 4,000, we talked about key levels a lot this week because these markets are trending. 4,000's been huge for Ether, no question about it. We've traded it repeatedly. Do we see that as resistance or support? Well, I mean, it's sort of, we haven't been able to sustain trade above that over the last probably 3 weeks. I still think you probably have a pretty good chance to break up over 4,000 and make it run at those all-time highs. So I would be bullish if I was doing it. As far as what we can expect out of Ether in the near future, I think that's sort of a challenge. That's anybody's guess. You'll notice that our weekly chart is really, really difficult. I mean, take a look at this formation. That's an absolutely huge weekly range. We've been inside of that back-to-back weeks. For me, I would be waiting. I don't think that I would be piling into Ether right now. I don't see that. One of the things that, a crypto, if you're interested, is Shiba. Saw really that big, massive sell-off down to about 67 a couple of weeks ago. That's beautiful. And if you take a look at Shiba Inu, the long-term chart for Shiba, I do have some experience trading Shiba. Actually panned out pretty good for me, but I missed the big money. That's okay. That's crypto trading. But really, if you look at these long-term lows, these historic lows back in 2022, these lows are all, down around what? Down around 6 or 5. And then you see, the massive, you see the upside potential of a Shiba right there, gaining 145% in a month. But we've really been flat with tight ranges. We sort of started to break out and test the bottom of this range. That was a beautiful bid. If you were down there from about 6.5, 6, and I'm just ignoring all the decimals, just the first number there is 6. It's a great trade. You've almost doubled your money just off of this tail. I like this market potentially. One thing that I would say, though, is big picture. Where is the value of a Shiba Inu? That's anybody's guess. I don't know what it's worth. I can tell you there's a tremendous amount of room in its all-time range back up to 25. Right now we're trading 6, so there's quite a bit. There's quite a ways to go before this turns into anything anybody really wants to own at an institutional level. But still, you can make some pretty good money trading it if you nail your entries. That's for sure. Let's go to Bitcoin here real quick, and we'll sign off. Yeah, absolutely. Eyes. Yeah, great. All right, let's see. One more. Bitcoin. This has been the level. We sort of defined this thing, and I've really been leaning on it lately. Right there is your swing low at 74. Love that. Swing high at 125, or 126. You can see that you've got a real nice, big, juicy range here. In about the last, 90 days, we have just traded inside of this 106 to 125 range. So we loved 106 down there. We just got it again the other day, and those are just turning out to be really good trades. I mean, they really are. This right here, heavy pressure. You'll notice the volume picks up. We thought maybe we were going to get a bum rush down to about 100, and it was certainly possible. But the nice big rally there, you'll notice volume died down in the rally, and then the volume kicked up, and you sold off, and now the volume died down, and you're positive. So the volume, when we do see those volume spikes lately in Bitcoin, it seems to be that they're bearish. I mean, the charts don't lie. Boom, boom, boom. So when it picks up, you see a sell-off. But now, when it goes away, you get your gains. So what that tells me is if there's not active selling, concerted selling in the market, the sentiment's positive. So for me, am I a buyer at 110? Depends on how much of a ride I want to go for. If I was saying, do you want to buy at 110? I'd say, okay, I'm going to buy at 110, but if it goes under 100, I kind of got to get out. Topside target, I could go to 120, and that right there is going to pay you what? Not quite 10%, but you're going to be in the ballpark with a pretty nice gain. So for me, I love trade location, and you'll find that if you wait and nail a few of these trades, you almost get hooked on waiting for your trade locations because when they come into play, you've got a real good chance of winning. Now, the problem is our locations, we don't always get our price, and that's really what makes trading challenging. I mean, for those of you that were with me all summer, we sat here and watched gold, and it was like paint drying all summer long. And now it's just a complete breakout to the top side. And the folks that waited, and they had a good strategy, and they were ready to go when it was time to trade, they made a fortune. And the folks that didn't, that forced it, you probably got chopped up before the getting got good. So that's sort of what we're looking at there in the markets today. That's your futures, Forex, and crypto scan. I think you're in an interesting position going into late in the month. The government shutdown's starting to become a big deal, and that's absolutely imperative that we understand what that can mean to the markets and also what that can mean to those EBT holders, the SNAP programs. Those are the big ones. And in my view, and this is just me talking, I think that the idea of 42 million Americans losing their food assistance, their nutritional assistance, I don't think that Washington, D.C. will ever let that happen. I don't believe that. But if they do, we have to be ready. You have to be ready for civil unrest. You have to be ready for more government uncertainty. You got to be ready for really anything in that area because our markets will react. They will, no question about it. Okay, guys, I'm going to go ahead and sign off. I want to thank you for joining me. Thank you for joining me all week long. Tomorrow, CPI Live. It's going to be a shorter stream. We're going to get in and out tomorrow. I'm going to cover the numbers. We're going to do some live trading, and then we're going to go ahead and sign off for the weekend and get ready to come back again next week. All right, have a fantastic trading day. Trade the action well, and we'll talk soon. See you.